Welcome to the Modern CPA Success Show, where we're 100% focused on helping accounting firms achieve success. If you're an accounting firm owner who wants to learn how to grow your firm by providing virtual CFO services, then this podcast is for you.
Welcome to our podcast, the Modern CPA Success Show. Today is a topic that we talk about a fair amount, but I think we can really dig in as we talk about automation. And I think we have a really unique company that we're talking to today. So Jesse Rubenfeld, the founder of FinOptimal, is with us. Jesse, welcome.
Thank you so much for having me.
Yeah, I'm really excited about this. So one thing that I think is unique, well, I'll let you tell more about your company. Can you tell a little bit about yourself? And then I'd love to hear about kind of FinOptimal and what it does.
Absolutely. I'm an accountant first and a programmer second. I started my career at LimeWire and began automating my own job, first with Perl, then with Python. And over the span of 15 or 20 years, developed a bunch of tools that helped me as a CFO, as a controller in various roles, step out of the booking of entries and the shuttling of data back and forth and focus on the strategic, on how to advise management and ultimately how to help our clients get what they want out of their accounting systems. And I took that capability and founded FinOptimal to help bring that to our clients and the clients of our partners.
Okay, excellent. And one thing that I think is really unique from what I have seen is, as we talk about fintech companies, most stop at we provide this service. And if you want to buy it, we've got this software that can do that. And what I understand about your company is really unique is you do have clients where you do the service and then you use your tools with those clients. Is that a good description?
Yeah, that's correct. We are trying to, sometimes I think of the Steve Jobs model of you have to build the hardware and the software to get the result. There's sort of a coupling there. I think a lot of times the accountants, the service providers themselves are gated by the tools they have access to. And this is one of the things that I learned when I was at DE Shaw is that when you really want to get the job done at a granular, precise level, frequently you have to build your own tools. Yep. We're not reinventing QuickBooks or Bill.com or Expensify or Shopify or some of the other popular products that we use, but we're integrating with their APIs in ways that really let us do our job better. And we call those integrations and other software that we've built our own tools. And we think that helps us a lot.
Okay, cool. So if an accounting firm wants to work with you, right? I think many of our listeners are offering advisory kind of services, maybe offering CFO services or wanting to get into that. I think often it's small firms. And one of the challenges that I think they have is I'm sort of trying to do everything. So I've got the bookkeeping, takes me a lot of time. I want to do the advisory, but it's hard to find the time to do that. And so the option seems to be either I hire someone to do that, or maybe there are tools. So is this one where someone can turn to you and say, can you help us? Or do you only work with your clients?
Absolutely. We definitely partner with CFO-services firms, occasionally other CPA firms that want to focus on the advisory angle. We don't necessarily want to provide the advisory services, but we want to give our partners a strong foundation of bookkeeping and accounting. We're focused in using automation to improve the accounting system. And that helps our partners, the CFO-services, the outsource CPAs, that are really, outsource CPAs are really advisors to their clients. They're looking for the advisory more, but you have to have the bookkeeping and the accounting there in order to do it. We want to be the wind beneath their wings.
Okay, cool. Okay, so I did hear in that you're not trying to compete with them, right? You're not going to come in and steal people's clients.
Of course not. No. We don't do any taxes or audit, and we refer that out to our partners, and they frequently refer to us because they want to spend their time on that advisory rather than figuring out how to optimally book their client-specific workflows, and that's what we're really good at.
Okay. So do you want to talk a little bit about the main areas of automation? Where do people see the biggest benefit when they want to engage you?
I think there's a lot of people touting automation, and a lot of times it's more like automating the accounting firm, like practice management, maybe some light scheduling of entries. We're trying to automate the accounting work. Think the controller's team, the people who are booking those entries. It's very, very tactic focused. It's a strategic choice to have a good accounting system, but getting that right is a very tactical precision profession, right? So we want to distinguish between automation and automation assisted, right? Like we think there's a lot of people out there doing automation assisted accounting work where there will be like a recurring journal entry scheduled,
Yep.
right? We call that automation assisted. Let's distinguish that from automation where, for example, if you're selling software and your HubSpot, you get a deal to closed one in HubSpot, great, you signed a deal, right? We see others doing it where somehow the accounting team gets an email and then it's their job to go in and calculate some entries and schedule them from booking, right?
Yep.
We do it. We try to fully automate that workflow, right? We connect our Wrangler data wrangling tool that grabs data from HubSpot. We apply some logic that's set up front, right? We send the invoice and we calculate and book the automated entries for deferred revenue recognition.
Okay.
That's full automation. Does that make sense?
That's cool. So then often you probably are then working with the clients around the importance of in this example, their HubSpot data, right? You're also saying, okay, then this workflow has to work in a certain way that when you close one, this is what's going to happen.
Absolutely.
You see that as a big change on the client side, that you walk in and they're sort of lackadaisical around how they deal with HubSpot when you first walk in?
It's interesting. I mean, certainly around field creation, I think different teams are accustomed to being really meticulous about setting up HubSpot. I think that the accounting touch points are often afterthoughts, and the clients that we've worked with to optimize, sometimes it's a matter of adding a new field or a few fields. And it's also a matter of teaching the people who are using HubSpot, hey, this information is going to flow directly into the system. So yeah, there's definitely a learning process that we go through with our clients because initially they don't necessarily know what to expect. Why are you talking to my CRM? You're on the accounting team. Right. Because historically people have said, don't double entry data. They're thinking like, don't enter it into QuickBooks twice, or don't enter it into your AP system and then again into QuickBooks.
Right.
But really we're looking for an integration that thinks through the accounting workflow at a power user level and talks about how it propagates from the other non-accounting tools.
Okay. And the one thing I like about your example is so if the client now has what they consider really good data in HubSpot, as an advisor, I can use that to then work with them. So one of the things that we do is we call it our pipeline review. So once a month with my clients, we're looking at their CRM system and saying, look, here's what you show on the horizon, your qualified deals, what you've won, all those kinds of things. A very common thing when we first start is they don't do a very good job keeping their CRM system up to date. So maybe initial conversations are, so you got all these deals, but a bunch of them are saying they're going to close in the past. On the call, you're saying we lost that one. This one's a different amount, all that stuff. So I can see the value if you're coming in and they're making the data better because it has to be used operationally. I can turn now that I can trust the data and say, does it look good or bad? And let's have that conversation about this deal's been out here a long time, all sitting in this closed status. What are you doing around that, kind of pushing on that side? So I can see the advisory side being able to sit on top of what you've done.
100%. I like to think of CRMs, CRMs like HubSpot or Salesforce, hopefully to some extent being built by salespeople for salespeople.
Yep.
Right. We're trying to, we use our own tools for our service clients. And that's why they're battle tested. I like to think of our software as by accountants for accountants. Most software companies don't use their own tech as much as we do. We eat our own dog food.
Sure.
And that's really important because I've worked in some organizations that have really strong accountants and really strong technologists. But when you talk about building or optimizing an accounting system, the accountants never know quite what to ask for. And the coders don't necessarily know what to offer. So you have this language, this accrual accounting language that represents a gap between the tech and the accounting. And by doing both, right, by being thought partners with our clients and our partners, CFO-services, accountants that are advisors, we're bridging that gap.
Yeah. Yeah, I can definitely see that. What about automation on the review side? So you get to month end and start reviewing to see if you believe that what's in the accounting system is accurate. What kind of automation are you doing around that to make that a better process?
Great question. It spans from the very, very tactical. Hey, I see that the bank statement has this balance and in QBO it's this. The register balance on your last reconciliation was this, and I can see that it's changed in QBO. It looks like somebody may have broken the bank rec, right? Very tactical. Or zoom out and think highly strategic, budget versus actuals. We thought we were going to do this. Where are things tracking? We try to get our clients to look at those things regularly. And this is why CFO services and accounting advisors are such valuable partners to us, because they know the client's business much better than a third-party provider like us really can. Sure. They understand where the numbers should be moving. They know what kind of dimensionality their accounting system needs, and we help get them that. And it shows in the budget versus actual or financial model or whatever each client calls it. They like to have, we like to let them use their model. You bring us your Google spreadsheet, your Excel spreadsheet. We will pipe the actuals in however you want to see them. And then you decide if things are moving in the right direction. So you understand what I'm saying, from the top level all the way to the very nuanced reporting angles were on my job.
So rather than the manual comparison that probably many people do, where you're looking back and forth between, like you said, a Google sheet that says, here's what I think I'll do in your accounting system, you're able to present and show, okay, here are your variances. Here's what you want to dig into to look at those things. Okay. Are you also automating things like reviews to see if certain accruals have been made, or other kinds of checks? There's usually this kind of invoice, did it occur this month, kind of thing?
That's a great question. I heard y'all's episode on auto review that I thought was really great. Sure. We are doing some of that. We try to so accruals is a great example. We have checks to make sure that total deferred revenue, for example, equals the sum of all of the parts, right? If you're a software company with 100 different contracts, you're going to be at various stages of the revenue recognition for those contracts. But we can tell you, and we can check the balance sheet to make sure, okay, your total deferred revenue is $3.654 million. Here's the amount from each of your contracts that's sitting in deferred revenue and prepaid expenses and unbilled revenue and deferred and accrued expenses. That's precision.
Okay. Yeah. That also often probably replaces a pretty manual spreadsheet of, do you have a subledger that's often maintained in a spreadsheet? Or the scary thing, if it's not maintained, someone looks at some point and says, 3.6 million, I don't think we have that much. And now you're panicking around your balance sheet because you maybe only focused on the part that was easier on the income statement.
Absolutely. I mean, we're talking about our accruer product, and it turns that input, that spreadsheet model, into an output, right? If somebody books an entry to deferred revenue erroneously that throws off the balance, we're calling that out automatically. We're sending an email to say, hey, look, the total of deferred revenue doesn't equal the total of all the individual contracts. Here are some entries that look like they don't belong. Take a look at them.
Okay.
Are you interested in offering virtual CFO services at your firm or scaling your existing service offerings? The Virtual CFO Playbook, How to Land $60,000 a Year Clients and Provide a Killer Client Experience, is an online series of modules that will equip you with essential tools for creating and delivering scalable VCFO services. These approaches have helped Summit CPA grow from $500,000 to upwards of $5 million in revenue over the past decade. If you're ready to grow your firm, visit summitcpa.net/VCFO Playbook to enroll now.
So then it sounds like one of the biggest things that you can offer if I'm a CFO services, rather than me having to scale by adding a whole bunch of people, putting this automation, and maybe the people stay about the same, they can just take on many more clients because they're able to look at the higher level and trust what's happening with the automation. It's not all people processing everything.
Totally.
Right?
The partners that we work with that do CFO services, to really do their job well for companies that are scaling, that have 50, 100 employees, for example, all this is also true at the smaller level, they wind up getting pulled in to bookkeeping and accounting tasks that are way below their pay grade, meaning they want to, this is what they're thinking of hiring someone else to do, right? Because they want to focus on advising the CEO, advising the CFO, but they get pulled into these accounting tasks, which you have to do them. If you don't do them right, you can't get the visibility that you want to give your client, but they are a time suck. We want you to be able to say yes to more business and still hire, but hire less. Hire for the strategic insight, less for the tactical accounting tasks that you need to get done.
Yeah, I can see the benefit of that. And you're right when you mentioned the pay grade. I can't tell you the number of times when our system doesn't work. I'm reviewing the final sort of financial statement right before the client meeting, and then you see something where you realize an entry was missed. And usually, I maintain the forecast, someone else may maintain the bookkeeping. And so then when you look there, you're like, oh, I'm way below forecast, not for good reason. I'm way below forecast because we missed something. And now it's sort of this scramble. And I'm like, why am I doing accounting? And so this
And
catching that for
those
them.
misses are natural. You incorporate new tools into your accounting system. The business changes. You add a business unit. You add an employee, and the tagging system needs to be updated. And mistakes get made constantly. That's why we need someone like your listeners that are doing outside advisory to catch those things and talk to us and say, hey, this doesn't look right. I can see, I'm about to go into this presentation. The numbers don't tell, what am I missing? And then you have a thought partner to quickly figure it out. Oh yeah, we did start coding this a different way. We didn't necessarily, and we fix it quickly.
Yeah. Okay.
It's not that mistakes never happen. It's that it's about having a set of eyes, a strategic set of eyes that partners with us, which is sort of the tactical angle of that to make sure it gets done.
Yeah. What about from a technology standpoint? What are the different accounting systems, different tools, things like that? How tech agnostic are you versus, okay, if you're thinking of clients that this would work, you've got to be using like these certain tool sets?
So we are on QBO. All of our clients are on QBO. That's really the only constraint right now. We've taken on clients that have migrated from other GLs to QBO. If they're already on a much larger monolithic ERP, it's probably not a good fit. Otherwise, it's worth a conversation. We have a lot of software that sits on top of QBO that helps connect to third parties, all different payroll providers, a lot of different AP solutions, expense management solutions. And we have our favorites, but we can work with almost all of them.
Okay. Do you want to describe, if someone wants to work with you, so they call you up and say, okay, I think I've got this opportunity. I'm an accounting firm doing these kind of things. How does that process tend to work for your accounting firm clients?
We would start with a discovery call. We take partnership calls very, very seriously. Of course, there's an opportunity to work in a very scalable way. If we make an advisor that's a partner of ours happy with one client, there's often more clients behind it, and we can implement other of that advisor's clients with greater speed because the advisor understands what we do. They're already a thought partner. But it starts with a discovery call.
Okay.
We try to listen first.
Sure. So then when you're doing this, it sounds like you would be very active in the process. Often when we work with accounting firms, they're saying, we've heard that you work with Giraffe or Plan Guru or Reach reporting for your reporting. But if I'm a small business owner, I feel like I have to become an expert in those tools. And so that can feel overwhelming. So I'm curious, when you come in, to what extent is it, hey, here's our tool set and they work and you're off on your own figuring it out versus FinOptimal saying, we're going to be with you and get this set up? Sort of how engaged do you stay?
That is a great question. We are definitely the second thing.
Okay.
We are helping our thought partners. And this is why so many software companies have an accounting channel, right? Because they're accountants that really learn to love their products, act as ambassadors for that software product to their clients. And when they learn how to use it, it saves the software company having to do that kind of training. So absolutely, we do a lot of hand-holding, especially at the beginning, but also throughout as things change. For reporting, we do try to stick mostly to Excel and Google spreadsheets, just because it's such a natural user interface that businesses are already using. We stay away from other reporting packages because we want to tune the way we interact with spreadsheets so finely that it just represents the least common denominator of financial interfaces, and we really like it.
Yeah, all accountants know how to use Google Sheets and Excel spreadsheets, so
a
pretty easy one to
Lingua
work
franca.
in. Yeah. So if I have ABC client and have this discovery call and we decide to go ahead and move forward, how much does that client know that I'm doing this? Are you interacting directly with the client very much?
That's a great question. We've done it a lot of different ways. Sometimes with the same CFO-services firm, for example, with one client, the client emails us directly, and in other cases, and we'll bill the client directly. And in some cases, the CFO-services firm will bill the client, and our relationship is more or less opaque, right? It's more of just like a Superman cape that our partner is wearing. So it works different ways.
Okay. So I might be able to describe to you, hey, here's everything that I'm doing with the client. And you could be saying, well, then let's work on the automation. And I know that. It also may be a case where you're comfortable saying, oh, we'll work directly with the client. If it's HubSpot, as you described, and want to talk to the client, I'm happy to do that you're happy to do that if that's how the firm you're working with wants it to work.
Absolutely. Very frequently, the first client, they may want us to, so one model that's worked well will be will be involved directly with the first client alongside the advisor, so that they kind of learn alongside their client. And then for subsequent implementations of their other clients, maybe they'll prefer to do it directly. That's one way that works. But I think there's a lot of different, season to taste.
Okay. And then if I work with you on an ongoing basis, how do I see the benefit of continued improvement in processes? We get something in place. Are there places you're saying, hey, there are new features or other things you can take with your existing clients and add on to that? Is that an ongoing improvement kind of thing?
It is, because we're eating our own dog food, we'll often develop new features and we'll realize, this client or this partner was using this thing that we did 3 or 4 years ago. We've now added this feature, and we try to keep our partners and our clients in the loop so they can benefit from the new stuff that we built.
Okay.
Hey, accruer, we're adding this feature that it can maybe talk directly to HubSpot instead of needing to do certain things that need to be set up custom. So, come and partake. Yeah, absolutely. We want to share those new improvements with our client. We want an ongoing conversation.
Yeah, that's what it sounds like. And so then I can continue adding other clients related to that. Tell me a little bit about pricing and how you do from a service standpoint with your clients.
So we sort of have 3 different tiers right now. I think the 2 that are going to be most relevant to your listeners are where we provide a lot of the tools, the software tools, in a we train you on how to use them. We help implement and make sure that you know what you're doing. And then we charge you more or less a licensing fee so that you can use the tools once you master them for all of your clients.
Okay.
And that's going to be priced lower. It really varies by the solution. We're still kind of figuring out the optimal price points just to sell software. But we also do more hands-on things where, we're receiving emails from clients, we're receiving emails from the advisors. The broad guidance I'll give is that it's a few hundred to a few thousand per month. We're not talking about giant sums of money. Certainly within the context of a larger ERP, like a monolithic ERP implementation, you're definitely saving money by working with us.
Okay. And then I can see lots of benefits. One of them is I probably have fewer people that I'm paying. That's maybe the trade-off, that I'm paying you several $100s a month and maybe saving a resource by doing that. So I could compare the cost in that area.
100%. I would say even more, you're getting scalability from whatever resources you hire, right? When you're doing advisory, there's a linearity to the extent you can scale, right? At some point, you need your team to talk to clients. But if you can get, 3 or 4 more clients per team member that you hire because you're using our software, we like to think it's double or triple your existing capacity. If you get that additional dimensionality that you want in your accounting system, then you're just getting more bang for your buck. You can grow a lot faster, say yes to a lot more business than you could before.
Okay. What about from a skill set? So it sounds like you'd have people who need to up their skills some, right? If I do bookkeeping things, maybe I say I don't enjoy it, but I spend a lot of my time just doing journal entries and now they're done for me. I'm in more of a reviewer capacity. What kind of skills as you work with a new client to say, okay, you've got this team that's going to be using it. Are there certain things where some people are more successful than others? If I think of kind of what's the right kind of maybe start at the senior accountant level. If I think of a client having a CFO and a senior accountant, at the senior accountant level, what are you finding are needed skills to really be successful?
That's a great question. They don't need to be a coder. They need to be tech savvy, which is to say have some intuition about how to use computers to speed their workflows. They need to be interested in learning. But I've trained people as a full-time controller that worked using custom tools that I built before I started FinOptimal, just very custom code, right? Very primitive user interface. And once they begin to understand, oh, wow, I can expect the software to book this for me. I can expect the spreadsheet to just have this data. You can train almost anyone. It's just about reworking people's expectations of technology. They're not used to asking for as much as they can get.
Okay. So just being open to that.
Yeah, and we've worked with people of all ages too. It's not about being young and just out of school, right? A lot of times people that have more experience are even more relieved to say, oh, wow, intercompany transactions. That was something that just was always a bear. We have tools to automate those wow, how do you do it? And then they're engaged and want to learn more.
Okay. I'm guessing there are cases where you're teaching even some accountants about accounting when you're saying I'm automating this, right? Here's what the correct
We're not above getting into
entry
debits
is.
and credits ever.
Yeah, exactly. So is someone performing the CFO level services, it sounds like they're also using the tools, at least like in your description of variance analysis, if I'm comparing a budget to an actual kind of thing.
Absolutely.
Okay.
Absolutely. I think the CFO services often leads, right? What does the business owner want to see? What strategic views are going to help them? It's nice to have a ton of fields, but don't do that unless it's actually going to, because it creates complexity, right? It makes it
Yeah.
harder to book. It makes it even harder to build automation. But if it's worth it, it's because, wow, when I make this decision, when I dial this up in my business, I see it in the results here. And my CFO can sort of help me tease the signal from the noise. And they're able to do that because they understand how it works and they understand what to ask for when something changes. Hey, I bet FinOptimal can probably add a field here. I bet they can, make this flow from here to there. I bet they can book entries automatically. I bet they can send these invoices to our clients. I bet they can bundle these 4 PDFs and send them to the person who's approving those invoices, bundle these other 4 PDFs and send them to the other partner who's reviewing stuff, right? Very,
Okay.
very nitty gritty stuff.
Okay. What are some of the things you mentioned? Bill.com. We're big fans of Bill.com. What are some of the automation things that you've done related to Bill.com?
Well, I mean, we love Bill.com. Their API is very, very complete. Meaning you can do almost anything with the API that you can do in the user interface. We've done stuff with their approval workflows. We have built things that automatically push stuff into, like, push an invoice from our client. Our client's vendor will send the client through an email that we monitor a PDF invoice, right? We'll do a lot of the machine learning to figure out what vendor it's from, how to categorize it. We'll also have someone on our team tag it. Let's say it's a prepaid expense, something that needs to be recognized over a 12-month period. We will tag that invoice, right, with designators that let our accruer, once it syncs from Bill. We'll push the bill into Bill.com. They can pay it the way they love to pay it. And then once it syncs to QBO, our accruer will automatically spread that revenue across the service period of that bill. It's a huge benefit to clients that are used to having to otherwise set up that amortization themselves.
Yeah.
I could go on. We've done a lot with Bill.com. I really love the company, and we put almost all of our clients on it.
Yeah, no, that is a great example. So in that one specific, you got my interest peaked because we spend a fair amount of time managing a prepaid schedule with a whole schedule. And oftentimes you just don't even realize something until you see a big spike and go back and say, hey, was this insurance bill for more than just this month? So how do you catch some of those things that this should be a prepaid kind of expense?
Tom, just imagine it being this simple. You put 2 dates in a line description in QBO or in Bill.com, as the case may be, because it'll sync over. And then we automatically book the P&L and the balance sheet and everything to make that right.
Okay.
It's that simple.
Okay. So if I'm going to review my bills and put in the note that this is from February until January of next year, then that's all I have to do.
You want to write February in words, February 6th, comma 2023, or if you just want to write 2/6/23, do it your way and we'll figure it out.
We'll find that. Okay. In some cases, from what you're describing, Jesse, it sounds like you're replacing some of what Bill.com would claim that they can do well, right? They can see an invoice and they'll scrape some of the information off and try to use intelligence to say where should it be coded and things like that. Is that?
I think that's
true?
A really good clarifying question. We definitely do some machine learning there to try to get ahead of that, but it's mostly because we want to manage the invoice workflow. Bill.com's AI to read the invoices is very good. And we're not really trying to compete with that piece of it. It's just that if the invoice comes into Bill.com through us instead of through the Bill.com invoice, we're going to be able to do more things like attach that invoice to QBO. Whereas if you go straight to the invoice, it's much harder to programmatically get that attachment out. In fact, you can't do it in Bill.com. You can't get the attachment out unless you also put it in. So those are little nuances. Bill.com's great with moving the money, with booking the entries to QBO. Those are not things that we're looking to get into. And it's an example of where we don't use every piece of functionality that Bill.com or Expensify or other our partners' products often extend wider in scope than what we actually use them for, but we consider them best in class and we want to incorporate them into our clients' accounting systems for that reason.
Okay. Okay. Let's talk just a little bit about the workflow, because what I have found with small companies is often the workflow of approvals is not very good. Maybe non-existent, maybe just a bookkeeper just paying what they want. Or if they start outsourcing that to us through Bill.com, now we've got, okay, you had your bookkeeper who could just walk down the hall and say, should I pay this? And then know the bills versus we see bills.
Yes.
So I'm curious, is we then put in place Bill.com and the approve feature? Sometimes that's hard to get the clients to get used to, and then you're chasing people down. So I'm curious, you had mentioned automating workflow. How do you make that piece work in a more smooth way?
It's really, there's so many different ways we do it. The Bill.com approval policy functionality is really, really good because it's a third party, like auditors love it, right? You can't, if you set it up right, it's really hard to fraudulently pay something without all of those provers being in the mix.
Right.
It is fairly complex to set up, but the API allows you to do so many different things. Like, so an example would be sometimes we'll have a client that wants to incorporate approval logic that's more complex than what the Bill.com approval policy allows, right? So we'll see the bill, understand the fact pattern, and then we'll put the bill in Bill.com and then make API calls that set the order of approvals that's specific to that bill, given how big it is, what vendor it's from, what class it is, right? But a lot of our clients still don't use the Bill.com approval workflows. They prefer to handle it by email or have a form that's submitted. And, we support that too. I wouldn't say there's one best practice there.
Okay. I'm glad you offer that flexibility, because I have also had clients who it's just this reaction of I don't want another thing to have to log into.
Of course.
Can you get it to me a different way? And so if 100%. They're a client who says, I love email and I will click approve within that, it's really cool that you can offer that if that's going to be their reaction to that.
Totally.
Okay. So how many clients do you work within that are on you're providing the service to? As you've mentioned in your term, eating your own dog food. How many clients do you have that you're working with?
About 100.
Okay. And the range of service that you offer to those 100?
We do. We'll do a full monthly close, including bank reconciliation, AP data entry, booking anything that needs to be booked one-off. We have a lot of power tools to help with that too. Organizing your books and records folder, because some clients are small enough that they really need what feels to them like a customized solution. But for us, it's really sort of tweaking dials on tools that we've built and battle tested for those 100 clients. So they get a customized feel, even though it's really kind of mass customization of tools that are effectively off the shelf in-house.
Okay. And then how do you organize your teams around the clients? What is your typical kind of org structure? And if a client's looking at who's my team?
We'll have at least 2 accountants, someone that we will call the controller on that account, and then someone who, they'll be in charge of the relationship. You could think of them as the account manager, but they're also, a CPA level account that understands debits and credits, and it's going to be able to field a client email and meaningfully, thoughtfully respond. And then they'll have someone on their team working with them who will be doing bank reconciliation, data entry for AP if applicable, and organizing the books and records and sort of handling more tactical things under the guidance of that senior accountant, right? We organize ourselves with internal task management tools that create a bank rec ticket each month, and sort of, we have kind of practice management type stuff. We just try to automate it as much as we can. Keep the people in the loop where they belong, automate the rest.
Yeah. And for your clients, I assume there's a mix of they have some internal bookkeeping staff down to you doing everything. Is that true?
Absolutely. We've got companies that have 300-400 employees, double-digit millions in revenues we've had 2 in-house people, right? Just kind of a director of finance and 1 person working with them. We've had smaller companies that want to be more hands-on, and we'll have 4 or 5 people in-house, and they just know what FinOptimal does for them. And, we stay in our lane and we work very well together. And we also have clients that have no one in-house, right? We're working directly with the COO of an 8 or 10 person company, and we're booking so many entries, it's saving them time from doing it. There's just so many different ways to slice it. The common thread is precision automation that avoids having to make people book stuff and remember stuff and copy and paste stuff themselves.
Yeah.
Built by accountants for accountants. That's the key.
Right.
It's not just practice automation.
I like the flexibility of having an internal team is an option. You can work with that, and not having an internal team is an option.
Absolutely.
Because we have coached firms who they don't want to deal with the back office, or they don't have the resource to deal with the back office. So they have to give up
often
business.
Look, there's sometimes we'll have an outsourced CFO firm. I'm sure some of your listeners and probably you guys have this experience. There will be in-house people. There'll be in-house bookkeepers or accountants, but then an outsourced CFO. Or they want to outsource the strategic piece. We see that all the time too.
Yeah. Yeah. And the business that they might give up on is someone who says, oh, can you do the transactional? And then they're looking for someone else to do that, or saying, I can't. And it sounds like the automation you have.
They're leaving money on the table,
Exactly.
Right.
Yeah.
Absolutely.
Yeah. By doing that, they could dig in and you could help them with that piece of it.
Totally.
Yeah.
Say
Are
yes
there pieces,
to more business.
Yeah. Are there pieces that you're saying, okay, you've mentioned your QBO. What about other sort of services or anything you're like, okay, we don't really get into that area?
Certainly no tax and audit. I think I mentioned that before. Those are each things that require keeping up with the regs, right? Doing a lot of deep thinking about the right way that something should be expressed, preparing schedules and narratives for the financials, right? And we work closely with those people. Very frequently, the tax accountant or the auditor will talk directly to us, right? Instead of talking to the client, but we're not writing accounting policy. We're maybe helping them decide. Right. We're giving them our thoughts, but our agreements say we're not doing, you can't sue us for a wrong opinion there. That's not what we're providing for you.
Yeah. Is there a certain time duration that so post-discovery call, someone says, yes, let's work together. Is there a typical onboarding time that you have, or is that not, are things too different to kind of say, here's what it takes to get up and going?
I think we can sort of generalize that it's small months, right? 2 to 4 months. Hopefully you get most of the way up the learning curve. In a situation where there's a lot of complexity or there's a lot of mess to clean up, which I'm sure is something, that you guys and your listeners deal with, it can take a little bit longer, but it's iterative, which is what makes it better than having to have consultants come in, implement a system that you're still figuring out, and then go away and you're stuck with what you got, or you have to rehire them. It's intentionally iterative. It's a monthly service.
Okay. Yeah. It sounds like a great way to engage with a new client, maybe even an existing client that you have. As we come in, we do process reviews with them. And often it is recommending, okay, you haven't heard of Bill.com. Let me explain what that can do, and maybe an Expensify and things like that. If you can then at the same time add the automation like you're talking about, I can see a client saying, wow, this is an impressive improvement in my internal processes. And as an accountant, I'm getting the benefit of the automation and the efficiency in the back end of that.
100%. The accountants and the outsourced CFOs, right? These advisors are so important to software companies because there's just to communicate. The client, again, doesn't know they're not even accountants, right? They're managers frequently. They don't know, accountants don't know what to ask for, right? The senior managers of the company are going to know what to ask for from accounting tools. No, they're not. So there's this big barrier of explaining the value and explaining in broad strokes how you deliver that value. And partners are so much, they already know the client, they understand the pain point, and they can say the thing that the client wants to hear to understand the value and make them want to go on this adventure, which is a great adventure.
Yeah. It sounds really like a cool set of tools and processes and things that you developed over time. Is there a particular kind of client? So if you've got me, okay, I'm sort of convinced, Jesse, that automation works and it sounds really good. Any particular client, if I'm going to call and say I'm already working with 10 different clients, how should I be thinking through, like, who are the best fit for this kind of thing, or who's the best fit?
Sure. Really low-hanging fruit's going to be software companies that charge, that have a lot of deferred revenue because they charge a 12-month fee or a multi-month fee. Then we could do the deferred revenue recognition. People that handle invoicing, professional services, right? If they're tracking time and they want to see the time cost, which you need to integrate payroll data with, right? So PR firms, lobbying firms. We have a sports agency client.
Lots of service-based firms, right? Fit that kind of a model.
Totally.
Yeah.
Companies on Shopify, we have a really tight Shopify integration that lets us get a lot more out of revenue recognition, including the deferred revenue piece if you don't ship right away. We really span a lot of different industries. We have language translation companies, anybody with repetitive transactions where you find yourself, if you're using the QBO, matching tool and just clicking match, right?
Yep.
Where you want nuanced rules for that transaction handling. We're handling that repetitive stuff that you kind of think typically, I should hire a junior person to do this stuff for me, right? Just before you hire that person, talk to us. We're going to try to convince you to hire more of a director of finance type of person that's going to help you with that strategic angle rather than someone who's just going to book entries for you.
Sounds great. So the discovery call sounds like that first good step. Do you want to tell people how to find you and get that initially scheduled if you pique their interest here?
Sure. Thank you, Tom. It's they should check out FinOptimal.com. We're offering tech and team to help firms and advisors save time and take on more business. Follow me on LinkedIn. My name is Jesse Rubenfeld, and I'm talking about these things a lot, as you might imagine, and would love to talk to your listeners.
It sounds very much like a conversation people should be having with you. I think it sounds great. Jesse, this has been really helpful. I really appreciate your time today, taking us through this, and hope that lots of people will take advantage of what FinOptimal can add for them.
Thanks so much, Tom.
Great. Thanks. Hope you have a great day.
Take care. You too.
Enjoy this podcast? Visit our website at summitcpa.net to get more tips and strategies for achieving modern CPA firm success. We're here to be a resource in this ever-changing industry.